Well, hello and welcome to the Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Juliet Zali. It is Thursday, the 28th of September. Well, let's get to some of the news that we have been seeing overseas. And the US House and Senate standoff is raising the chances of a government shutdown. That could lead to the furlough of hundreds of thousands of federal workers and the suspension of a wide range of government services, from economic data releases to nutrition benefits. However, in a boost to the economic picture, US durable goods orders beat expectations. The data suggesting that manufacturing, which makes up 11.1% of the overall economy, is muddling along, despite surveys suggesting the sector is close to recession. We saw US Treasury prices fall following the data, two-year yields rising from 5.04 to 5.15%, 10-year yields accelerating from 4.5% to 4.64 during the session, and that is a fresh 16-year high. The dollar rose against a basket of currencies. Well, let's focus in on the international markets, and Japan has been attracting a lot of attention from international investors this year. What is behind that? With more on the Tokyo Stock Exchange and stock specifics, Alex Simotas from Langdon Equity Partners joins me now. Great to see you, Alex. I understand that you've just been to Japan. What were some of the key takeaways that you saw there with your meetings?
That's right, Juliet. So between September and August, kind of spent about a month in kind of your part of the world. Between Japan and Australia, spent about a month there, and we're based out of Toronto, so quite the distance and quite the journey. So we met about 35 companies while we were there, probably roughly split 50-50 between Australia and Japan. And Japan specifically, in terms of what's kind of been attracting a lot of attention to the market, well, obviously the weekend, kind of the low-hanging fruit there, Warren Buffett investing in the trading companies, and more recently, it kind of coincided with Warren Buffett investing, but just the Tokyo Stock Exchange is putting out guidance on kind of effective capital management, and specifically targeting companies with low ROEs and price to books, or effectively high cash balances. And that last point has been a significant driver of stock performance, not necessarily business performance, but we could expand on that.
Yeah, well, let's expand on that, because as you say, you're targeting some of these companies with the low return on equities and low PBs as well. What sort of companies are you looking at specifically?
So let me kind of break that down into two parts. One, kind of the market impact, and then looking at kind of what was intended by the guidance versus what is kind of actually happening in reality, and how that kind of impacts what we look at, or how the companies we look at are reacting. So the market impact, back in March of this year, the Tokyo Stock Exchange put out kind of guidance specifically targeting companies with low ROEs, low price to books, to basically get them to invest that capital, the cash that's sitting on their balance sheet. And if you look at what's kind of driven the performance in the Tokyo Stock Exchange Prime Index, and the Prime Index is really a proxy for what the Tokyo Stock Exchange deems kind of the highest bar of governance in Japan. But there's also liquidity and some financial metrics, but the highest bar of governance is also necessary to be included there. What we've seen in that index since March, massive outperformance by the companies with, oddly enough, low ROEs and low price to book, implying that the market is either expecting some companies to suddenly find areas to deploy this capital, or to release the cash to shareholders in the form of some kind of special dividend or buyback as kind of a one-off response.
Hmm.
To,
Alex, in your
Go ahead.
meetings in Tokyo, did you see sort of any change to the landscape? Because it's really interesting to note that Toshiba, which is such a big Japanese company, is going to go private. We know it's been hit by scandals. There's been a lot of scandals in Japan in general with some of these big name companies. How is the landscape changing? What are investors sort of looking at now for attractive returns?
So in terms what the market reaction is kind of implying, and in terms of what we're seeing in the ground, um, we mentioned there's kind of two things that are happening here, um, forcing companies to reinvest, and as a last resort, kind of releasing that capital to shareholders. Um, in terms of what we're seeing, it's been more kind of the latter of companies either issuing special dividends or buying back stock. Um, it's a little ironic because the Tokyo Stock Exchange guidance kind of mentions dividends and buybacks as a last resort if they can find anything to kind of reinvest in. Um, so in terms of the companies that we met with, um, we tend to agree with the Tokyo Stock Exchange. High cash balances are a symptom, not the problem. The problem is not having areas to deploy that capital efficiently. So that's why two-thirds of the businesses we met um, have been successfully redeploying capital, have kind of are either net debt or have a couple of percent of cash as a percentage of their market cap. So those are the companies we tend to look for and hold on to for a very long time. We're not looking for a trade here as companies kind of do a special dividend. We're looking for companies with track records of successfully reinvesting their cash flows at high returns and allowing them to dominate their market over kind of the next 5 to 7 years.
Okay, you mentioned there the yen. I mean, we've been looking very closely at that level towards 150 to the dollar, where we know there's often intervention. How is that playing out in terms of investors looking at potential attractiveness when it comes to foreign investment?
Right. Well, I think that the yen recently kind of hit a recent low, um, just comparing to kind of the U.S. dollar. In terms of how that impacts some of the businesses we look at that kind of pay for their goods in U.S. dollars, that's really crushed gross margins for multiple, at least consumer companies that we look at, which is kind of a quarter of the companies that we look at. But it'll be interesting to see if the Bank of Japan intervenes here. They kind of didn't do so recently. But it's a delicate balance of kind of, you have a population that's declining and uh, yen that's weakening. So it's a bit of a stuck between a rock and a hard place.
All right, you also mentioned that you were here in Australia during your recent month abroad. What did you see in terms of the attractiveness here for our market? I mean, a very different picture to the likes of Japan.
Yeah, absolutely. Well, look, one company that we really liked was Breville. I don't think I need to kind of lecture your audience on what Breville does. But very quickly develop small kitchen appliances. They differentiate with R&D. Their machines have the most functionality and buttons than any kind of other product on the shelf. The value I could maybe add as somebody on this part of the world is, their products are kind of among the best in class here or are the best in class. They're just a little less known. Um, so, as a plain vanilla thesis for Breville, if they just keep doing what they've been doing and taking incremental share at the rate that they have been, um, they should be able to continue to do that with the differentiated product and current distribution strategy alone. So with that alone, we would be surprised if they never grew double digits again, which is what the market currently expects. Um, and that's the plain vanilla thesis. Now, if you prefer your thesis with kind of fudge and sprinkles, um, what they're doing with kind of Breville Plus and beans.com, um, that's really kind of what that is. Um, so Breville Plus, very quickly, that's just the app that kind of harmonizes all your Breville products. They tell you exactly which blade to use on your Breville food processor, which button to press for how long. And then you put it in kind of your Breville smart oven, which automatically cooks it for you. The idea there is you could use your own food processor. Doesn't have to be Breville, but the idea is that when it breaks, Breville is going to be the top consideration. More interestingly, and just as a final point, the cherry on top of the sundae, that's really what they're doing with beans.com right now. So right now, in the US or the UK, I could buy any Breville coffee product and get kind of a $200 kickback on free coffee from beans.com. So I could buy, to be clear, I could buy a $300 machine, the Bambino, and I could get $200 back in free coffee. That's like comparing two $30,000 cars, except one of them gives you $20,000 of free gas.
Hmm.
I'm not sure, Julia, but which one would you pick in that scenario?
Yeah, good point. Although I really, really love coffee, and most Australians do. Alex, thanks so much.
Absolutely.
That was really interesting and insightful on a stock that we don't cover in so much close detail every single day. So really interesting thoughts there. Alex Simotas from Langdon Equity Partners joining us here on The Global View. Well, let's have a quick check of where the local market is set to open. We are expecting to see a drop of 13 points, or around 0.2%. Don't forget, it is a really big day in terms of dividend payments. So we've been talking about this $22 billion figure over the course of the week, a lot of it being paid out today. When you look at the likes of BHP paying out $6 billion, CBA 4, then you've got Fortescue, Woodside. So a lot of happy investors, or whether they're going to get that dividend reinvestment plan too, and it goes back into the market. But one to watch today, as we have a lot of those big name companies going ex-div. The boss himself, Koshi, coming up next for the Open. Stay with us.